Steve Letwin, thanks so much for joining me.
My pleasure.
I want you to talk about what's happening at IAMGOLD. There's some very exciting things coming down the pipeline right now. What's happening there?
Well, let me go back in time a little bit. Probably two major challenges that IAMGOLD had is the cost structure and the life of mine. We had very short life reserves. I would say 8-year life reserves, which in the industry considered to be quite short. A cost structure that was running at around $1,300, $1,400 an ounce, all in sustaining costs. In a business where gold prices had fallen from almost $2,000 an ounce down towards $1,000, we became very unliked. Where our share price fell precipitously as the gold price fell because our margin fell. So we had two major challenges to take on. One, get that cost structure down. Two, extend our reserve life. Now, we've been able to do that, and I give full credit to our management team, our operations people for that. What they've been able to do, frankly, is go right to the site with productivity improvements and with a lot of incentives at the site, get our people to start thinking about making money again. And that has brought our cost structure down to about $1,000 all in sustaining costs. So a dramatic improvement. So the market's rewarded us for that. The other thing that we've done, which we talked about briefly coming here, is that we moved our strategy to what I call a short cycle capacity strategy. And what I mean by that is that we started to focus on finding more gold in and around our infrastructure, as opposed to spending a lot of money trying to find large deposits in other countries or in the same country. And what that did for us, frankly, is it moved us significantly towards adding reserves, because we've had some great success, and also helping us reduce costs yet again. So it was a double help. We reduced costs, we're bringing in higher grade ore, soft rock, into our mill that we didn't have before, and we're extending the life of the infrastructure that we've already paid for. The best example I can give, and it's been written about a lot, is our discovery south of our mill in Rosabelle called Saramacca. We believe there could be up to 2 million ounces in a very small defined area where we've been drilling. So the good news is huge amount of ore that's very good in terms of its grade, 2 to 3 grams an ounce. Also very soft rock oriented. So all of a sudden we're going to be able to move this soft rock, higher grade ore into our mill, reduce our cost structure even more, and extend the life of Rosabelle probably another 10 years. This is a mine that 4 years ago had a life expectancy of 2018, next year. We're now looking at a 2030 mine life with all these extra resources. I think that's why we're the top performer year to date. That's why we were the top performer last year. And I believe we're going to see some significant improvement in both our cost structure and our reserves going forward. What we're seeing at Rosabelle, we're seeing in Burkina Faso with our Essakane mine. That philosophy of short cycle capacity is really paying dividends. We haven't forgotten about long cycle. Cote, our Japanese partners, have come into that. So we have a real good combination, long cycle, short cycle, and it's showing in our results.
So I want to follow up on what you've just talked about there. You have an announcement coming up in July 27th.
Right.
What are you planning on announcing on that date?
Well, what we're hoping to do is educate the market about the great results that we expect to see from the concession drilling that we've done at Rosabelle. So put Saramacca to the side. We've been in contact with analysts. We've been giving the markets updates about the fact that with improved drilling, with our saddle deposits, which are deposits that exist between our pits, we have a very good feeling about increasing the resource at Rosabelle, even without Saramacca. So what we're hoping to communicate to the market towards the end of July is an update of that reserve and resource, which we've promised for some time. And I think and believe that the market's going to react quite favorably to the fact that without even considering Saramacca, this large discovery we've made south of our mill, this mine has got a life of its own without help. So add Saramacca to that, and as I say, you have got a brand new mine. A mine that had been forecast to literally end its life as we know it, 2018, is now going to be moved out in time over 10 years. And the cost structure, which is extremely important, is going to come down significantly because the infrastructure has already been paid for, the grade is going to improve, and the rock is going to be softer than what we've been mining for the last 2 years. So put all that together, and the economics of our Rosabelle operation are going to improve dramatically.
You just said you brought costs down by almost $200 overall per ounce. In terms of what's happening with this new discovery that you're going to be announcing here very soon, it seems to me like you've really turned a corner with the company. As you say, you're the top performing gold stock,
right,
in the market year to date.
Right.
What do you think you guys are doing right that other people are doing wrong or just haven't quite figured out?
I think we started about 4 years ago realizing that cash is king, which most people know already, and that in order to be one of the top performers, our cost structure has to be competitive and our reserve life has to be competitive. And I would say we didn't sell off a lot of gold to do that. What we did was we looked into the company itself and said, what can we do from a manpower standpoint, from a human resource standpoint, and what can we do with the assets we currently have? And that was a huge change for us. In 2012, we spent $160 million in exploration. And 90% of that was on long-term capacity. Today, we're spending 40 to 50 million, and 80% of it is on short cycle capacity.
So how difficult was it for you to convince the board to go in that direction?
Not difficult at all. I would tell you one of the best things we have going for us is probably one of the strongest boards in the industry. Extremely strong technically, both financially, operationally, and from an exploration standpoint. Chairman Don Charter has been with the company 25 years. He brings a lot of good balance. That board is very, very good at helping me execute the strategy. And of course, I have a team of people that's been with me for the last 7 years that have stuck with me, and they have been executing superbly. So we did have to make a major change. It's been a successful change. The dividends are showing up now in terms of results, and I think people are all of a sudden noticing that, hey, we're a player.
Okay, so why don't we talk a little bit about this deal that you've done with the Japanese?
Right.
You told me a brief story before we went on camera today about essentially seeing, the eyes of the geologist from Japan that had seen what you had to offer, and the gold was glistening in his eyes.
Right.
Give me that whole story and lay it out for shareholders. Why should this be a deal that excites them?
Well, Côté, we purchased Côté in 2012.
So this is a project that IAMGOLD has where?
It's between Sudbury and Timmins in Ontario. It's about a 2-hour float plane ride from Billy Bishop Airport. You can land right on the lake there, and we have a 10 million ounce deposit, 6 kilometers off the highway. So we, under the same sort of strategy of buying something or developing something with infrastructure, we looked at Côté and said a couple of things. Number one, all the energy infrastructure is there. Number two, the labor force is there. Number three, it's in a mining-friendly jurisdiction. We have 2 major railways, a major highway there. So we're not having to go up into God's country and build infrastructure and spend hundreds of millions of dollars to do it. It's there. That makes it extremely attractive to us. It's a low-grade deposit, a gram a ton, but we can make good money off that at $1,200 gold. So when we looked at it in 2012, we came under a lot of criticism. And I can understand that fully because at the time gold was falling. People said, why are you going for low grade? The margins are not going to be there. I think at the time, understanding the criticism, we kept working, we kept drilling, we kept developing it. And as we improved the design of that mine and people started to realize this is hard to find, these deposits, they started to give us credit for it. And
so was that the impetus really that you felt like, look, I understand that the gold price is falling, all that, but you have to stick with me because these are just so difficult to find. We have to, go with the ball that's been given to us.
Yes. I believed in my heart of hearts, as did the board of directors, that this mine would be a mine, that it would have a long life, and that it would attract investment because as time went out, we would see that these kind of resources are not readily available, especially in a mining-friendly jurisdiction like Canada. So we believed in that, we executed it, and a year and a half ago, I stood in front of Sumitomo Metals of Japan, and I made our pitch about COTE. And I'll be very honest with you, I made the pitch in Vancouver. What would have been a 45-minute meeting went on for 2.5 hours, but I didn't hear from them for 4 months, and I thought, oh, I must have been really bad. I must have blown it. But they called back and they said, we've done a lot of looking. We like what you said. Can we talk? And I said, sure, we can talk. So we took them to the deposit. We flew into Timmins. It's an 1.5-hour bus ride. You can drive this massive tour bus right into the deposit. And the head geologist there, we went out to where the pit's going to be, and he stood on the outcrop, and there's visible gold there. And I could see in his eyes, as he looked over the area, that this was something he hadn't seen. That with all his due diligence, all of his investigation around the world, he was in a territory that was friendly. He was just off the highway. He could see the power lines. He could see the abundance of water available to do the mining. It's the Canadian Shield, hard rock. And the grade being the grade, a gram a ton, was something under a bulk tonnage design could make money. And I knew that they would come. Now, credit to Jeff Snow and his Henry Kissinger talents. He got them down the road and signed. But they paid $195 million to get into COTE, and they are committed to another $300+ million to develop it. So this is a major success story for IAMGOLD. It's validation, it's confirmation of what we believed 4 years ago, 5 years ago. And it will be a mine, and it will be producing 320,000 ounces a year for the next 20 years. And this is a very, very important part of our future.
So obviously you see this as, you just mentioned the word future, you see this really as the future trend, that people are trying to find assets that don't necessarily have a long life, but they have a long enough life, you can make enough money, and then you move on to the next one. You really see that as the direction that you need to take the company?
I think we have to have a good combination of what I call short cycle capacity combined with long cycle capacity. You see that, I come from the oil and gas business, I've been 7 years in the gold business, but shale oil, shale gas is a good example of short cycle capacity. That will beat long cycle capacity every day, all day long as you can get the resource into your hands. When that resource becomes short, then people will move to long cycle capacity because they can't find it. What makes IAMGOLD unique is that we have a very good combination of short cycle capacity and long cycle capacity. A lot of the majors have long cycle capacity without short cycle capacity. And I know that sounds strange, but for us, given our geographic makeup, given where we've been able to find resource, it really makes it compelling to invest in this. And when people look at Saramacca, and by the way, the analysts out there, the highest valuation on Saramacca today is $30 million. It's incredible. We're talking about 2 million ounces front end, and we're talking about a margin of $500 to $600 an ounce.
So what do you think that's about?
Well, they haven't had time to do the evaluation, but we're talking about something far north of 500 million versus 30 million. Mm-hmm. Once we get that factored into the stock, once people understand that this deposit is transformational for Rosebel and for IAMGOLD, I think you'll start to see the stock move. And that's the noise you're hearing on the street now. And we've published the drill results. We'll publish the 43-101 on September 6th. We've been very transparent. So this isn't disclosure that no one else has heard of. They've seen it. Mm-hmm. But they really haven't factored it in. When they do, I think we'll see our stock move, and I think people will start to realize that our short cycle capacity strategy is really working.
Okay, I would be remiss if I didn't ask you where you think the gold price is going. Obviously, everybody says it's going up in the seat that you're sitting in. But realistically, given what we're seeing with governments, the interest rates are going up. It just happened here in Canada, just here recently. Right. What's happening in the U.S. Is the gold price, do you think it's stabilized, or do you think it's slowly going to creep up? Where do you see it? And from your point of view, with what IAMGOLD, how you set your numbers, what do you guys put in there as a realistic number when you're doing these projects?
I think today, Jonathan, and you and I talked about this briefly, I think we have a new floor. The floor was around $1,000 a couple years ago. I think there's reasonable comfort, although you can't trust it totally, that it's more like $1,200. There is no algorithm for gold prices. We do not count on gold prices to save us. That's why we have such a strong balance sheet. We don't have our debt repayment due until 2025. Carol Banducci has done an outstanding job managing the balance sheet, just like Gord Stoddard has done running the operations, and Craig McDougall on the exploration. I have a very strong team. So whether the gold price is $1,200 or $1,100 or $1,000, IAMGOLD is in it and no longer threatened by that. I think there is upside to the gold price. I think with all the geopolitical tensions out there, the Trump factor, and the fact that we are seeing reserves decline over time, and it's getting harder and harder to find big deposits. Grades have come down more than 40% in the last 5 years. And as you and I talked about, try and get a gold deposit permitted. It is a challenge and a half. So you've got to pick the right jurisdiction. It's got to be mining friendly. You've got to be able to move those permits ahead. You've got to be able to design a mine that's got both long and short cycle capacity. It is a big challenge. So put all that together, I think gold has a better chance of moving up towards 1,300, 1,400, 1,500 than it does moving back down to 1,000. Having said that, one thing I learned after 35 years, never run out of cash. We have 700 to 800 million in cash on the balance sheet. Our debt is not due to 2025. We're in it for the long term. And as we bring our cost structure down, we improve our margins, that cash will continue to build.
How much debt do you have right now?
We have 400 million in debt. Due in 2025, and we have approximately just under 800 million in cash.
So you're in good shape.
We're in very good shape.
Good shape. Okay, I want to go a little bit of a different direction, talking more maybe about your personal story. But before we get there, first off, final question for you, and again, something that we talked about briefly before the camera started rolling. The big majors all seem to be having problems right now, and you have an interesting prescription as to why they seem to be in trouble. Why don't you outline for me the direction that you feel that they're going and why they've been in trouble? And second to that, do you think IAMGOLD has the potential to become a major with the direction that you guys are going in? Because everything you're telling me here and what we've talked about over the last number of hours, it sounds to me like that's something that you want.
Right. Well, the world produces 100 million ounces of gold every year, and that's declining. And that's made up of majors like Barrick, Goldcorp, Kinross, Agnico Eagle, all great companies, all well-run companies. The challenge they have is they're big, and they have to replace their depletion. So every year, you're producing 2 million plus ounces. You've got to go out and find that. And more importantly, you've got to be able to move it from a resource categorization to a reserve categorization, which means you've got to be able to produce it. For the companies like those that I just named, it gets more and more difficult to find those deposits that are readily mineable that can produce enough gold to replace depletion. So there's no shale gold to replace like they've seen in the oil business. Sure. It is more and more difficult. So I would tell you that the biggest challenge they have is depletion. They cannot replace what they're producing on a timely basis. And if you're looking at that as a gold investor, then we become extremely attractive. And yes,
because there's so much upside.
There's so much upside. So can we become a major? We can. I would like to see that done organically as opposed through acquisition. I think if we can find more and more gold at Essakane, at Rosabelle, at Westwood, at Côté, Sadiola, if we can ever get the Malian government on side, all bring us up to about 1.5 million ounces. I consider that pretty good. And I would be very proud and I would be very pleased if we were able to do that in the next 5 years organically. Whether or not we'll have an acquisition opportunity, not sure. We're not compelled to do that because organically we have so much in front of us.
Right. Okay, why don't we rewind a little bit? Tell me a bit about your personal story. As you mentioned before, you started out in the oil business. Give me a bit of your career direction.
I actually started out at Procter & Gamble in finance and in Toronto, and I wasn't there for a long period of time before I got headhunted into the oil and gas business with Dome Petroleum. And I spent the next 20 years, 25 years in the oil and gas business. I moved from the upstream side to the midstream side, got more into operations as opposed to finance. I always wanted to run something. I had to get operational experience to do that, so I gradually moved from pure finance as a chief financial officer in the oil and gas business to working as a president and COO at TransCanada and Enbridge, both great companies. And I learned just an extraordinary amount from the TransCanada and Enbridge days. Spent time in Houston, spent about 10 years in Texas in total. Learned how to run operations because my boss at the time at Enbridge, Pat Daniel, gave you a lot of empowerment. He was a great leader. I got a lot of development there for 12 years. And at the end of the day, I wanted to go out and make my mark, and thought after 30 years in oil and gas that mining, which is very similar to oil and gas, would be a good area. And I got headhunted into IAMGOLD. And I have to tell you, we've had some tough times, but I have also had the time of my life. And I've been blessed with a great career, but I've never had a better time. I've never had a better team. And I had great teams at both Enbridge and TransCanada. They were fantastic. The team I have at IAMGOLD are world class.
So tell me about your emotional reaction when you got a call from a headhunter saying, hey, this gold mining company is interested in you.
Well, it was more the reaction from my family and my friends that said, are you crazy? Like, you have a great job right now and you're making good money and you've got a good track record. Why, in the name of God, would you think about going into gold mining? Because nobody really understood gold mining.
Sure.
And I said, I'm 55 years old. I want to change. I want to try something new. I like the idea of working in Africa. I like the idea of working in South America and trying to add value there. Don't want to sound like I'm looking at the soft side too much, but I guess. I was thinking we could build mines in Africa. We could improve the standard of living there. We could improve the standard of living in South America. And we could build a Canadian company. And so it attracted me. And I got a lot of pushback from a lot of friends who said, why would you take that risk? And I said, I've got about 10 to 15 years to do something. I'd like to go and try that. And as far as I could see, this is a great company with a great opportunity. And I took the risk. And it's turned out to be a great opportunity.
So were you, before you got into gold mining, were you invested in any gold stocks? Were you an investor in any way? Did you play the juniors at all?
No.
No, nothing?
Nothing.
At all?
No, I was very fortunate in the oil and gas business, made a lot of money. Was able to look after my family. Everybody was set up for life. And as I said to the family and to my friends, it allowed me to go to another card table without betting anything that would hurt the family and start a new card game. And because there's risk on both sides of this. And I made sure that no one was put in harm's way financially, and they were looked after, and it allowed me to go out and see what I could do. In many respects at Enbridge, there was so much infrastructure. I'm not saying it isn't hard to be a leader at Enbridge. It's very difficult. All the challenges that are there. And Al Monaco, who's the new president, is a fantastic leader. tough job. For me at the time, I wanted to step out of what I knew so well and try and challenge myself and see if I could develop. And maybe it's tough to explain, but I felt at the time that stepping out of what I'd become accustomed to, that I'd become used to, would help me develop new skills and challenge me, and that has been the case. I will tell you that I am much, I think, a better individual, a better leader after the 7 years doing this than if I would have remained in the same kind of job for an additional 7 years. So that risk I took on helped me develop and change my life.
You mentioned something very interesting. You said that there was a soft side as to why you decided to do this in terms of helping out in Africa and South America. Was that something that was instilled in you as a child, as a teenager? Where did that vision come from?
I grew up on a farm, didn't have a lot of money, 6 kids in the family. Father went back to school at the age of 37. My brothers and I and sisters, basically with my mother, ran the farm while he went back to school. And at the end of the day, he went from being a brakeman on the railway to a senior executive at Canadian National Railway, and ended up in Africa running a development project for the Zimbabwe Railway for 4 years. This is a guy who had a grade 11 education that just went and at the age of 37 said, I'm not happy with who I am, I want to become somebody better. And when I look at him and think about what he did, I thought to myself, I'd like to try and do something better. And we have. In Africa, I will tell you, it's not me as an individual, it's our board, it's our company. We have done some great things there, and I'm proud of them. And that certainly was part of the attraction.
So in many ways, it's the vision of your father that led you to do something like this.
Absolutely. And my mother, because if it wasn't for my mother, he never would have been able to get his degree in economics and then get out of that compartment he was in. And he changed dramatically, and all for the good, and ended up being in Africa, for God's sakes, off of a farm in Sherkston, Ontario.
Interesting. So I think the connection then being made that, as you say, at 55 years old, for you to leave a business you're very comfortable, you're making a lot of money, to try something new. Yeah, it kind of fits the family mold there a little bit.
Yeah, without risking the family, because we had done well enough that the family was looked after. So I would never risk the family. The family always comes first. But for me personally, I felt if they're looked after financially, I want to go out and try something new. And it's turned out to be a good thing. Now, 3 years ago, I was thinking, whoa.
Yeah, IAMGOLD is, I must say, you've had some pretty tough times.
Oh yeah, listen, absolutely. And, but that was part of the development too. I'd never experienced that before, because maybe I was sheltered or insulated or whatever, part of a big company. I'm sure Pat Daniel had to, and he had to live through that. Al Monaco's going through that as CEO, but I was protected by a lot of the infrastructure at those companies. And so when then you become CEO and you're front and center and the share price drops and you have shareholders who are angry and you're at the front of the line in terms of, and you should be, when those redemptions are coming through, you grow up.
What's it like facing the heat?
At first I was really, it's hard not to take it personally. And to some extent, you always take it personally, or you wouldn't try and improve things. The family, your friends are very important in that support. And in fact, I just sent an email out thanking a lot of people for that, because with the latest upsurge, I've said, hey, you've been a good friend. Fred Mannix, I sit on his board in Calgary, and the Mannix family. He was instrumental. He called me, I remember, on a Saturday morning in Toronto and said, and we were going through tough times, and he gave me a pep talk, gave me some advice. And those kind of people, the Fred Mannixes of the world, made a big difference to me. And you develop, you really grow up. And I think I could handle most things now after Our share price fell. Now it's coming back up, which is great. The one thing you have to watch is, don't drink too much of your own whiskey now and become become overconfident. We're seeing some good results, but it's measured, and let's stick to the script and let's move this along without becoming too full of ourselves.
So what's maybe the biggest lesson you've learned about leadership in terms of this process of going from a great oil company to a company where you've had some issues and you're starting to turn the corner and things are looking good? What have you learned about leadership through this process?
Empowerment. Empowerment leads to extraordinary behavior. If I give you responsibility and the ability to implement strategy and execute, and I believe in you, there's no stronger formula for success. And if I had any advice for any leaders out there, it would be, to the extent possible, empower your people. And I am a huge fan of empowering our executive team, and I really encourage them to empower their leaders. And we've seen the results at Essakane and at Rosabelle, where you say to those general managers and those leaders, this is the challenge we have. I can't change it, but you can. And you have the authority, you have the power to do that. And we've seen it in spades where they've taken it and they run with it. That doesn't mean you abdicate. You watch it, you measure it. And I learned that from my father and mother too. When my father went off to school, he gave my brothers and my sisters and he empowered us. So did my mother, and they said, hey, we can't run the farm anymore. You have to go do that. I'm going over here. And you grow up real fast when that happens. And we're seeing that with our managers, right across the board. Now, whether it's Gord Stoddard, Carol Banducci, our two executive leaders, I say to Carol, we need to do this. That's all I need to say. I say to Gord, we need to do this. That's all I have to say. They go and make it happen. That's the lesson I've learned.
Steve Letwin, thank you so much for your time.
Thank you, Jonathan.
Really appreciate your comments.
I thank you.